Defined in what context?
Price action. So price action studies the supply and demand of buyers and sellers. So it can usually tell you, and a lot of Wall Street firms use this type of markups. I'm sure if you've seen CNBC, et cetera, they do a lot of price action and technical markups. And the reason is because it can give you a pretty good forecast into what could happen in the future, compared to something like technical or fundamental analysis, which you're looking at months ahead of time. Mm-hmm. So technical analysis or price action can kind of give you a buy or sell point. So for instance, on here, if this were to break through the support resistance level right here, this is a key level.
200-day moving average, or?
No, I don't use moving averages, and I'll go through why I actually like price action a little bit better, because if you use simple moving averages, you're actually using a mathematical formula on price. This is the purest form that you can get of analyzing price.
What? I don't know that I was suggesting using the moving averages as entry-exit indicators, but definitely. So you see, like the first dip, was it late February?
Yeah, right here.
Right here. So that actually the lowest part of the candle wick, that actually just touched
exactly
the 200-day moving average. So I think that's what indicated to a lot of, I don't know if just a lot of buyers rushed in and said, yeah. Mm-hmm. I personally didn't make trades, but I know of several people who have made great profits just using ETFs. I mean,
yeah.
So what is the difference in price action? I mean, what you're using it to identify entry-exit points?
So simple moving averages are actually the exact same thing, but they're using a mathematical formula to try to find the trend line. That's all they're doing. So for instance, this is a straight line. There's no doubt about it. But a simple moving average is trying to do the same thing, but mathematically. Okay. The reason why these patterns and these numbers are important is because algorithms. I'm sure as you know, algorithms make up about 95% of US volume in the stock market. So I promise you, there's tons of algorithms looking at these key levels, and they understand that this is a perfect, the risk to reward ratios at this particular point are so great. That's why you'll see these massive moves at these technical levels. It's all based on risk reward, probabilities, odds. So if you're interested in that a little bit more, we do cover it. There's some videos that I can refer you to where I kind of talk about it a little bit more. So, but anyways, as I was saying, these are key levels that have been tested. And I would look to maybe take profits or exit the market if we started to see a breakdown of price below these technical levels, because that tells me that a huge uptrend where buyers are buying aggressively and they're defending their positions is starting to change. The momentum is starting to change. I'm considered a swing trader. So I'm not a day trader. I trade for positions for a couple weeks, months at a time. And I study trends and momentum. So this is a huge trend, as you can tell. If I zoom out a little bit more, these are the type of moves that I'm interested in catching. I'm not interested in these small intraday movements. I'm interested in catching massive moves like this, where you hold it for maybe a year, 2 years, depends on the position, depends on the stock. So once when momentum starts to switch, I'm going to look to exit my position. Now there's tons of strategies. The way that I do things isn't the only way to do things. You can make a lot of money using a lot of different strategies, but this is what works for me and what makes sense. So if this starts to break, then it tells me that buyers, because buyers are buying more aggressively at higher levels, are starting to lose their strength. Sellers are actually starting to overpower. Sellers are starting to overpower buyers. So that's whenever I look to get out of the position, because I'm not sure where price can consolidate and start a new movement, or where buyers are going to start buying aggressively again. So I'd rather just be out of the market. It's kind of my philosophy.